Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 11, the statement of cash flows, and we're doing the short exercises. Right, so note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so let me get my pen here. The short exercises, and we're starting out with 11-2. And it says basics of statement of cash flows. Answer these questions about the statement of cash flows. Right, 1, what is the check figure for the statement of cash flows, and where do you get this check figure? 2, list the categories of cash flows in order of importance. And 3, what is the first dollar amount reported using the indirect method? Right, so getting the check figure is the change in cash, which can be found on your comparative. All right, so let me just write it out here. So you have a change in cash, which is found on your comparative balance sheet. All right. Your comparative balance sheet. Okay. It shows the beginning and the ending cash balances, for the period. Right. Basically, it's sort of like reconciling things. That's why it's a check figure. Okay. Right. Number 2, list the categories of cash flows in order of importance. You have your operating activities, then you have your investing activities, and then you have your financing activities in that order on your statement of cash flows. And what is the first dollar amount reported using the indirect method? That is your net income, which comes from your income statement. All right, that's simple. The purpose of the statement of cash flows. Ice Mountain Inc. experienced an unbroken string of 10 years of growth in net income. Nevertheless, the business is facing bankruptcy. Creditors are calling all of Ice Mountain's outstanding loans for immediate payment, and Ice Mountain Inc. has no cash available to make these payments because managers placed an undue emphasis on net income and gave too little attention to cash flows. Right? Before I read that next part, this kind of like is, if you went back and you watched the theory videos, the very first one, I said cash is king, right? Without cash flowing through the business, okay? You can have cash in your bank account, say, okay? But if you don't have additional cash coming in, you're dead in the water, all right? You're gonna just run out of cash as that, flows out. So you have inflows and you have outflows of your cash, right? If you don't have the inflows, it's just going to keep on going out and you end up at 0, and that's what this is all about here. So reread that paragraph in order to have some idea as to the mistake and the reason why you create a statement of cash flows. Right? Now, obviously, very, very small businesses, mom and pop businesses who basically work on a cash basis, they're not going to create the statement of cash flows. They'll create a balance sheet and an income statement, but they don't create the statement of retained earnings. They don't create the statement of cash flows because they're such a small business. But once business starts to get larger, right, then, if you have a statement of retained earnings, that if you have investors, it's great to create that for them to be able to see. But I would actually make the statement of cash flows a precedence over the statement of retained earnings. So every business has a balance sheet and has an income statement, and then it's a choice, retained earnings or cash flow. I would have a tendency to put cash flow before retained earnings, but retained earnings are created because it's derived, it's the detail from the equity section of the balance sheet, and that's why that generally is listed third. But for actual usage and analysis, cash flows would come first. All right, so it says write a brief memo in your own words to explain to the managers of Ice Mountain the purposes of the statement of cash flows. Now, the solution does give you a memo there, okay? And realize that you can sit here and I'm going to let you read it for yourself. I'm not going to repeat it, all right? But what I do want you to pay attention to is that, if you look at it, that's a professionally written memo, okay? When you're working in the workplace, this is the way things should look, all right? And have the information presented. Right? It shouldn't just be scribbled out on a piece of paper or just typed any old which way. I mean, you should have to or from a subject, and this is where the English composition comes into play, and your writing skills and abilities, because that shows how professional you are, right? So I'm not going to go through the purposes of statement of cash flows. I mean, basically, you're paying attention to your cash, and everything derives from that. But go ahead and read it yourself in order to get a little bit further insight. Right, next one. Right, let's see here. Classifications of items as operating, investing, or financing activities. All right, so identify each of the following transactions as one of the following. All right, operating, investing, financing, or non-cash investing and financing activity. All right, so I'm not going to write NIF. I'm just going to write N for that one. For each item, indicate whether it represents an increase or decrease in cash. The indirect method is used to report cash flows from operating activities. Right, so this is if you were watching the theory videos, okay, you saw where I had said in the reporting aspect, I believe was the video, that gave a template for for the indirect method and the direct method. And it sort of like gave a template showing the statement of cash flows and the increases and decreases for the various adjustments. Looking at those templates, that exhibit would come in handy right now in trying to be able to answer these questions. Okay, so we have a cash sale of land, right? Well, if we're selling land, that's like a long-term asset, right? And the long-term assets happen to come underneath the investing activity. And since we're increasing our cash, that would be a I for investing, and we're increasing, so that would be a plus. Right? 2, issuance of long-term notes payable in exchange for cash. Okay, long-term notes payable generally happens in the financing section, right? And since we're issuing a long-term note payable in exchange for cash, right? We're getting cash, so we're going to increase it, right? So that would be a plus. We're getting cash in and we're giving a note payable. That's the liability aspect of it. If we look at the liability itself, the note payable, that's money that's going out. You would think of that as money we owe as being a negative thing, but realize that that's one half of the transaction. The other half is you're getting the cash, okay? And that's on the positive side, right? Right, depreciation expense of equipment. Depreciation expense is a part of the operation of the business. It's on our income statement, so that's O for operating, and we're going to add that back in because that expense is taken out, right? It decreases our net income, right? So if I had 100,000 and I had, say, 70,000 in expenses, I'd have a net income of 30. Well, if out of that 70, say 5,000 was for depreciation, right? If we get rid of it, right, in other words, we're taking it out because the depreciation is a phantom expense, it doesn't affect cash at all. Well, our expenses go down to 65, okay? And because it goes down to 65, our profitability goes up to 35, right? So that's why it's an increase in our cash position. Right? Purchase of treasury stock. Treasury stock is part of the financing activities. And when we purchase treasury stock, money is going out of the business. We're buying back the stock. So we have a decrease in our cash position. Right? Issuance of common stock for cash. Okay. Well, again, the common stock is in the financing section, but this time when we issue the common stock for cash, we're actually, getting stock. I mean, we're actually getting the cash because we're selling the stock, so that increases our cash position. Right? An increase in accounts payable. Right? Accounts payable is a short-term liability, but that affects our we're using the accounts payable because it affects the operation of the business. I mean, that's why, and if you went through the theory videos, you saw me go through the example of cash versus accrual. It facilitates the function of the operation of the business. So that's an operating activity, and when we have an increase in accounts payable, we're going to increase, that's going to be an increase in our cash, right? Right, net income, that's shown on our in the operating activity section, and as income goes up, that's more cash for us. So that's a plus in that respect. Right, payment of a cash dividend. All right, cash dividend is part of the financing activities, and when we pay it out, we're decreasing our cash. So that's the negative there. Decrease in accrued liabilities. Right? Accrued liabilities are part of the operating activities, right? And when we have a decrease in the accrued liabilities, that negatively affects our cash. Right? Think that through. All right. I'm not going to go through it, but if you understand, like the increase in accounts payable, right here, as an increase in cash, well then a decrease in the accrued liability, why would that be a negative, right? Work it through, think it through as to what the effect is on cash, right? I'm not going to go over it for the simple reason you have to develop your own skill set of being able to think through when you see something that you're not accustomed to, okay? That you don't see on that template, right? If you have any questions, feel free to contact an instructor and we'll go over it with you, right? But me just telling you what I already know, it's going to go in one ear and out the other. And if you don't go through the thought process yourself, it's not going to stick. And when I was talking in the theory videos, I had said, yeah, here's a checklist of the various things that you're going to do in the operating activities, the investing activities, and the financing activities, right? But that's not the end all be all of everything that you do. You're going to come across different things. But the thought process that you develop when you're thinking about these different activities, okay, is what you use when you come across new situations. So I'm going to leave this one for you. All right, so J is the loss on the sale of land, right? That's our operating activity, and that's a plus. Why? The sale, a loss on the sale of land, and we're getting rid of an asset, but the loss or a gain is recorded on our shows up on our income statement. Okay, the acquisition of building by issuance of a note payable. Right? Yeah, we're getting a building, but we're issuing a note payable. Right? There's no effect on cash. Right? So that's going to be an N for the no effect. Non-cash investing and financing activity, or just NIF, the N. Right? Payment of long-term debt. Long-term debt shows up in the financing activity, and the payment of it is a decrease in our cash. Acquisition of the building by issuance of common stock. Again, we're buying a building, but we're issuing common stock, so we're not affecting cash at all. Right? And a decrease in the accounts receivable. Okay, well, accounts receivable affects the operation of our business. I mean, it's derived. We make a sale. Part of that sale is accounts receivable, right? And when the decrease in the accounts payable means that somebody is paying off their accounts payable, which means we are getting cash. So that's going to increase our cash position. Right, so a decrease in inventory, the same thing as our accounts receivable. I mean, we're making sales, so we're affecting our inventory. So that's part of the operation of our business. But when we sell the inventory, so our inventory goes down, but we're getting cash for that inventory, so our cash increases. So it's a plus. All right, an increase in prepaid expenses. Right? The prepaid expenses, even though it's an asset, it is affecting we're going to expense that over the course of, time. Right? So that is, an operating activity because you're running the business as that being an expense. But when we increase our prepaid expenses, which means we're paying more paying more in our prepaid expenses, and paying more means we're shelling out more cash, so that ends up being a negative to our cash. Right? So I'm going to stop the video here, but I just hope that you see some of that thought process as to what happens when you have these different activities or transactions and the net effect on the cash position. Yeah, you have to identify whether it's operating, investing, or financing, but you have to think through what is the effect on the cash. And that's that's what you're trying to capture when you're thinking about creating a statement of cash flows. Okay, so if you didn't understand any of that, go back and watch the theory videos. But this type of thing, like I said, you have the template there, a list of different activities that you can take a look at. By all means, it's not an end-all be-all of the list that can happen. It's more about understanding the thought process. But the more of these types of things that you do, the more accustomed to going through that thought process occurs, and it becomes easier and easier to be able to identify what the effect on cash is. And if you still have any additional questions, feel free to call and speak with an instructor. All right, see you in the next video.